So you're thinking of buying a home in Ontario, and you're here on YouTube looking for the step-by-step process of how to do it. Buying a home is a huge commitment, and you want to make sure you know what you're doing. So in this video, I'm going to walk you through buying a house in Ontario step by step in 11 easy steps. Hi, if this is your first time to the channel and you want to know everything there is to know about living, eating, sleeping, playing, working in York Region, Ontario, then subscribe below and tap the bell for notifications so you can be the first to know about the current market in this area. My name is Faiza, and I've been helping people just like you make that move to York Region, and I love it. As a local real estate agent here, I want to help you make that move. So whether you're moving in 9 days or 90 days, give me a call, shoot me a text, or send me an email, and I'll be happy to help you make a smooth move to York Region, Ontario. Now let's get into the video. Step number 1 is, are you even ready to own a home? You should be asking yourself, am I in a position to buy a home? Am I responsible enough to own a home? So first thing, you need to have a steady income and employment, which means you have a regular paycheck coming in, you have a budget, and you understand your finances. If you're in sales, working on commission basis, you need to have about 6 to 8 months of savings to compensate for a regular paycheck. You also need to understand your debt to income ratio. What is debt to income ratio? It is simply the amount you owe versus the amount you earn. How is it calculated? First, you add up all the fixed debt payments you make each month. This could include your mortgage or your rent, your condo fees, your car loan payment, your phone bill, any payment that you make. Let's say you get a grand total of $2,000. Divide your total monthly fixed debt by your total monthly earnings. So make sure that it is your gross monthly income and not your net income. Let's say your gross monthly income is $4,000 and your total monthly fixed debt is $2,000. You would divide $2,000 by $4,000, which gives you 0.5. You multiply that by 100 and that would be your DTI, debt to income ratio. Your DTI ratio is 50%. In other words, you owe 50% for every dollar you earn. Why is DTI ratio important? People tend to focus more on credit score and completely forget about this. Your DTI ratio is a big deciding factor for the lenders. The lenders look at it heavily to make a decision on whether or not to give you a loan. So knowing your DTI ratio can give you an idea of your approval odds. Most Canadian lenders agree that DTI ratio should be under 40%. You should also know how is your credit. If your credit is good, you have a higher chance of getting the loan approved and at a good rate. Step number 2 is figuring out the affordability. This is probably the most important aspect of home ownership because this will determine if you're going to live comfortably or if you're going to be house poor. What is your monthly net income and how much are you spending on housing? Cost of housing could include your principal, your interest, taxes, insurance, any maintenance or POTL fee, and utilities. I'm talking all in. Your housing cost shouldn't be more than 30% of your net income. Step 3 is down payment and closing cost. Down payment is simply a percentage of the home price that you're paying for with cash and then taking a mortgage for the rest of the amount. You can put anywhere between 5% to 100% down. 5% is the minimal down payment in Ontario. If you put less than 20%, you will have to pay PMI, which stands for private mortgage insurance. It doesn't go towards your principal or interest. It is literally just a monthly fee, aka insurance for the bank. The minimum down payment is also based on the purchase price of your home. So for $500,000 or less, the minimum down payment will be 5%. For $500,000 to $999,999, it will be 5% of the first $500,000 of the purchase price and 10% of the portion of the purchase price above $500,000. For $1 million or more, the minimum down payment will be 20% of the purchase price. I have mentioned this in the description below for your reference. If you're self-employed or have a poor credit history, your lender may require a larger down payment. Normally, the minimum down payment must come from your own funds. It's better to save for a down payment and minimize your debts. Other than the down payment, you also have to save for the closing cost. What are the closing costs? On average, the closing cost in Ontario ranges between 1.5% to 4% of the purchase price. So closing costs generally includes your land transfer tax, your real estate lawyer fees, your title insurance, etc., and would need to be paid on the closing day. Step number 4. The next step is the pre-approval. This is simply just going to the bank saying, hey, Mr. Banker, my partner and I are looking to buy a house. Can you tell us what we're pre-approved for? They will look at your income, your employment history, your debt to income ratio, your credit score, how much you have saved for down payment, and they'll come back to you with a dollar amount that you'll be pre-approved for. This will actually allow you to budget better, and you will know, okay, this is the amount of money we can borrow. This is what we can afford. It also helps you to get under contract fast. The seller will have more confidence in you. They will know that you can close without any issues as you're pre-approved by the bank. Step number 5 is working with a real estate agent. Hiring a local realtor who knows the market is very important. Interview a couple of realtors. Your personality may clash with one person, and with the other you may hit it off right away. So make sure you know who you are hiring before you go on this house hunting journey. Do I really need a buyer's agent? I'm going to tell you, yes, you do. So now you're going to say, Faiza, you're going to say that you're a realtor. Yes, and that's the reason why I know what a buyer's agent can offer. The buyer's agent is representing you, so they have your best interest in mind. You can go directly to the listing agent and still buy. However, the listing agent has already signed a contract with the seller, so they will have the seller's best interest in mind, not yours. The seller's agent will not negotiate for you. Also, this home buying process can be emotionally nerve-wracking. The buyer's agent, at least a good one, will calm your nerves down and will walk you through the process. Also, the buyer's agent is typically compensated by the seller. So you using a buyer's agent who will work for you is free for you. So why wouldn't you hire a buyer's agent? Step number 6 is starting the house hunt. Before you start this process, your realtor will sit you down and determine what you need versus want. What are the must-haves or good to have? You will be dissecting the where, what, when, etc. Where do you want to buy? What are the must-haves in the location and the property? What square footage do you want to buy? How many beds and baths or any other special features that the house must have? For example, it has to have a den or a backyard, etc. If you're doing this with a spouse or a significant other, figure out what things you would align with. Make sure that you're both on the same page from the get-go. If you're going on the house hunt with kids, check out this video somewhere on the screen where I talk about tips that can make house hunting with kids a little bit stress-free. Step number 7. The next step is writing an offer. So you like the house you see. Your agent will be writing an offer on your behalf. What is an offer? The offer is what you're willing to pay for that particular house. It would include a full contract that you're saying yes to. So make sure you're reading it and your realtor is taking the time to sit down and explain it to you. Things that the agreement of purchase and sale generally includes are the deposit amount, the closing date, any conditions like home inspection, appraisal, or financing conditions. Also, anything that you saw in the house that was not a fixture also must be part of the contract. There are 2 types of things. There are shadows and fixtures. Shadows, something to that effect. The simplest way to explain it is if you turn the house upside down, anything that falls down is a chattel. Anything that is permanently attached to the house and cannot be removed without causing some significant damage would be a fixture. Fixtures are included in the price of the home. However, chattels are not. So you need to specifically say it in the contract that you want it included in the price of the house. The other thing that goes with the offer is a story. People love stories. It could be about you having a baby or getting married or starting a family, or it could be how you are looking forward to raising your family the same way the sellers did. 3 things that can happen once your offer is submitted. The sellers can accept your offer, decline the offer, or they can come up with a counter offer. And at that point, you just continue the negotiation. So once your offer is accepted, you will submit the deposit to the listing brokerage. What is a deposit? Deposit is money being put forth in good faith, telling the seller, hey, I'm serious about buying this house. The deposit money goes towards the down payment or the closing cost. The deposit money sits in the listing brokerage trust account. The seller does not have access to that money until the closing date. Step number 8. Once you get the contract accepted and you've paid the deposit, you are now under contract. Now it's time to clear the conditions that you are included in the contract. It can be a home inspection, an appraisal, or any other condition. Once the conditions are cleared, now your offer is firm. Step number 9. The next step is completing your final walkthrough. So you want to do a walkthrough of the house a couple of days before the closing. You want to make sure there's no new damage to the house, like water damage or big gap in the wall while the seller was moving out. You also want to make sure that the things that were part of the contract are still in the house. For example, the appliances or the window coverings or the light fixtures or the chandeliers. Basically anything that is part of the contract should be in the house at this point. You want to make sure no fixtures have been taken off the wall. In case there are any issues, they can be resolved before the closing date, so there are no delays in closing. Step number 10 is to close. The first step is preparing the closing documents. Your real estate lawyer will begin to prepare closing documents that will include checking the title to ensure there are no issues and the transfer of land. At this point, you should have all the paperwork ready, which includes the mortgage documents, the mortgage broker's contact information, the sales agreement, the proof of title search, proof of homeowner's insurance, etc. While you're getting ready for closing, don't forget to get the utility set up and have a moving company scheduled. Your real estate lawyer will meet with you 2 to 3 days before the closing date to sign your purchase and mortgage documents. The lawyer will review them with you and you will be signing the dotted line. At this point, you will be submitting your down payment. On the closing day, the seller's lawyer receives the required money from your lawyer to close the transaction. Your lawyer will now send the documents to the land titles for registration. Once the sellers have received the money, their lawyer releases the keys to your lawyer. Typically, this occurs anywhere between noon and 5 p.m. on closing day. Congratulations, you're now a homeowner. There's just one last step. On the closing day, make sure you visit your new home and do a complete walkthrough of the house again. Make sure everything is in order. All the appliances are in working order, all the taps are working, all the toilets are flushing. The seller is responsible only until the day of the closing. If you find anything that is wrong, then the lawyers need to get involved on that day. If you don't report any issues on the day of the closing, you're basically out of luck. That's basically the wrap on the home buying process. I hope you found some value in this video. So whether you're moving in 9 days or 90 days, give me a call, shoot me a text, or send me an email, and I will be happy to help you make a smooth move to York Region. Also, don't forget to give me a thumbs up and subscribe to my channel to learn everything there is to know about living in York Region. Until next time, I'll see you guys around town.